We're jumping right into this video because Ricky doesn't let me do it any other way. We're talking about capital gains in real estate in BC. Rick, I got that right? I know I got that right. So we are sitting with Surinder, Makkar today. So I'm going to change it up this time. I'm going to ask you what the topics are going to be today.
Sure.
Oh, actually, we already know what the topic is, but we just said it.
Capital gains on real estate, right?
Go right into it.
So basically, capital gains on real estate. So when do you have to pay capital gains tax when you sell a property? So if I live in my home and I've owned it for 6 years, now I sell it, most of us know that we don't have to pay any capital gains tax on that because we've got your principal residence exemption and it's all good. So you don't have to pay tax. You can take those proceeds and do whatever you want with them and not worry about taxation. But there's a lot of interesting gray areas. What if CRA comes along and says, hey, you had a business project, you didn't live in the house long enough? So I've got 5 cases on the go out of 25 cases at this time where all of them, the people lived in the property for 6 months, 8 months, that sort of thing, and CRA comes along 3 years later and says, we know you sold this property 3 years ago, you claimed it as your residence, but we think it's a business income, and now as a business project you're going to be taxed at a very, very high rate. And they get this letter in the mail and they're scared. They don't know what to do. And so that's a big issue. So when is property a capital asset where it's a capital gain? You only pay tax on half of your gain, and sometimes you have to pay tax on the whole gain. So that's what we're going to talk about today.
So now I understand the importance of this, but it's even a struggle for me. Being a realtor, knowing how important this is, not only myself, but a lot of viewers out there, the word tax comes around, it's very scary, right? It's so scary that you don't want to hear anything about it because it almost puts you to sleep, right? Let's be real about it. I mean, it's honest. I mean, if I hear about anything about taxes, I'm like, right? It gets that way, but it doesn't mean that is not important. Actually, even as a realtor, as many deals as we do, it's so crucial. It's so crucial, and which is why we were trying for the longest time to get Mr. Accountant on the show. And let's talk about when someone buys a property under a year or something like that. Let's go on while I'm fixing the tie that you told me to wear.
Yeah, you just gotta move.
Yeah. You just keep talking.
Yeah. So he's got many shows where he's wearing a nice tie. So I just assumed it was gonna be like this, but
you said you're gonna wear one too.
Yeah. I just figured I'll come like this. So So basically, what happens is if you don't live in the property long enough, or if you flip a property and you had an intention to live in it, and then you actually don't move in, CRA can come along and say, hey, this is business income, and we're going to treat this as a business project. As a result, you're going to pay business income tax at a very, very high rate. So if you made a good amount of money, let's say $300,000 on the sale of a property, you're going to pay tax on that $300,000 and include it in your income. Now,
there's a very common misperception out there, and like I said, I'm going back to my experience being a realtor, that a lot of people say, well, I've owned the house for over a year.
That's right.
There's no capital gains. Or, this is only a rental property. And this happens, not really supposed to be happening, but they don't declare their rent. They probably put their address on there or something. We're not going to mention any names, but since they're doing that, they think they have a loophole around that.
That's right.
Can we explain a little bit about that?
Excellent point. The Tax Act says that every Canadian taxpayer has to show their income from all sources of income. So all sources pretty much covers everything, and that's the reason they designed the wording that way. So if you've got rental income, you've got a house that you own as a rental property, you have to show the rental income, but you're entitled to take your rental expenses like your mortgage, interest, the property taxes, insurance, etc. So you're allowed to claim all those expenses against it, but you have a duty as a taxpayer to declare all of your income. So whether it's rental income, whether it's the sale of a property, whether you had an assignment and you flipped a property, all of those things are taxable. And some people think they can get away by not showing it. You definitely have to show it all.
And let's be very quick about this. If you think you can get away with it and you don't get away with it, what are the possible fines? Like, what could happen?
Exactly. So one, they'll include that unreported income into your tax return. Secondly, they'll assess you to levy penalties. And the penalties are 50% of the taxes you avoided. So you have to pay the tax plus half, 1.5 times, half more of the tax, and interest on top of both the tax and the penalty.
Wow. So with that being said, let me just jump into a little bit, because I know how Ricky always says, mention hoodies, mention this. Please like, subscribe, put that thumbs up because, Ricky always gets mad at me when I don't do that. That being said, let's talk about the credentials. Let's talk about who you are for a second, because I'm sure our viewership is going to know, yeah, he's talking this way, but does he really know what he's talking about? Right? So let's actually just introduce you. Let's show our viewership who you are.
So my name is Surinder Makkar. I have my own accounting firm called McDonald Makkar Public Accountants. I specialize in doing taxes for realtors and the real estate industry. So people who have multiple rental properties, or they're builders or developers, or they flip property. So that sort of thing. I'm specialized in doing taxes for realtors, and I also work for a tax law firm called The Old Lawyers as a taxpayer representative. So I negotiate settlements with the CRA on behalf of people who are being audited. And the way I fell into those two businesses or roles is that I used to be an auditor at CRA, and I was a specialist in the real estate industry. My role at CRA was to audit people in those areas, people who have multiple rental properties, people who are realtors, people who are developers, and people who flip property. So I have all that inside knowledge from working at CRA that allowed me to develop my accounting business as well as working with a tax lawyer.
So, hope you guys all got that. He was the one that we're supposed to hate. Right? But he's the one that audited us, realtors, and everybody else, and came after us. So if you have a complaint to make, Ricky will put his number there somewhere like that, and we know exactly. I'm joking.
Yeah.
But the best thing is, and I always say this, the best way to know the law is actually know it. Know the other side, know the ifs, know the buts, know what's right, know what's wrong, and that's the way you can actually navigate. A lot of, even with lawyers, a lot of top defense lawyers were actually prosecution lawyers before. They know how the other side works. Right? And that's why you go with them, because they know how to work the system, because they've been on the other side.
They get the inside knowledge.
Exactly. And this is why it was so hard to get this guy on the show, because he has so many of these files. So going right back into this again, Ricky's gonna bug me again because he's making some, kind of hoodie symbol on this, and you guys might have saw the camera shaking a bit. That wasn't me, that was Ricky doing something.
Ricky.
But thank you. See, I got another one on the show that blames. But please subscribe, comment, say I have subscribed. Ricky will send you a hoodie on his dime, because he always says it's on my dime. It's going to be on Ricky's dime this time, and then you'll get one. So with that being said, let's jump to the next thing.
Yeah, so basically, if you go to the BC Real Estate Association's website right now, it shows on there that there's a new 12-month rule. And basically what it says is, in the 2022 budget, the federal government is proposing that if you sell your home within 12 months, even if you lived in it, then you're not going to get your principal residence exemption. You're going to have to pay capital gains or business income tax. Well, actually, it says business income tax on it. And so that's a very hard and fast rule. Historically, if you look at tax history since the 1980s, the tax court and the judiciary has stayed away from setting a hard rule of the number of months or number of years you have to stay in the property. Because now, if you've got a 12-month rule, every 13th month, someone who's has that kind of mindset, they're going to live in the property, stay in there for 13 months, sell it, and move into the next one and continuously do that. Mm-hmm. And so that's why the judges have stayed away from setting a hard timeline for that. And now the issue is they're proposing to put that into legislation. I think the judges had done, the tax court had done an excellent job. What they had said originally is to take a holistic approach if you're a tax practitioner, in terms of analyze the whole thing, from the purchase to the holding period to the sale. What was the client's intention when they bought the property? What was their intention while they held the property? And how did they act during the holding period? And what were the circumstances that led to the sale of the property? So those were very common sense type of guidelines, and that created a gray area where a tax practitioner could argue with the CRA, explaining extraordinary circumstances why someone had to sell a property. And CRA would, even if they took a hard line, they have to negotiate with you and have to look at the circumstances of the situation.
So I'm glad you talked about the gray area, because I was going to mention something about that. Now, I'm obviously not going to ask you to do something illegal or there are loopholes and anything like that, but I'm going to ask you a straightforward question. Is there times that a person goes to an accountant like yourself, maybe not you, but like yourself, ask a question, they don't get the answer that they want? Maybe you lack experience, lack of something, I don't know, we don't know them. But can they get a no or a negative answer to their question from somebody else, but when they come to you, get a whole different result.
Absolutely. Yeah, I've seen that many, many times. And it's very circumstantial. You have to look at everything on a case-by-case basis. And there may be issues that arise. When I go question a client, we spend a lot of time and we get into depth. And so situations come about. And there's always, whenever there's terms and conditions in the tax law, there's always exceptions. And you have to see, is there evidence here in the circumstances where the client has evidence that they can fit into an exceptional circumstance.
So much like my profession, lawyers, doctors, accountants, there's not a cookie cutter profession. You know, there's other people, although we have the license to do it, our experiences, our background, our knowledge, the way that we handle can differentiate ourselves from this way to this way, a low level to a high level, a lower paid person, entry level to a higher paid, correct?
That's right. Exactly.
So there's no cookie cutter way. Great, let's carry on.
Before we move on, I want to congratulate you on your election as the Vice President of the Fraser Valley Real Estate Board. That's a great achievement.
Thank you. I'm very, very, very proud of that, and thank you for mentioning that.
Yeah. We've had good talks, and I appreciate how concerned you are about the membership, and he's already got a lot of initiatives that he's planned to bring forth to help the membership.
I thank you for mentioning that. It was a very big accomplishment, not for myself, but for even the membership that I've been voted. There's a lot of great things coming about, and only by associating ourselves with the right people to get further knowledge in our industry, when we're in an evolving industry, can we actually go forward with it. We can't stay with the old ways, right? I mean, you got to remember back in the day, the way we lit our room was with a candle, right? Now we got lights. We got light switches, right? We've evolved. Same way with every industry. Right. So thank you for that. But let's get you going. Let's get going again.
And it's the same thing with the tax industry. It's always evolving. I find it interesting and exciting. And a lot of people worry talking about tax is going to be boring. But I don't see it that way because it's always moving forward.
Yeah, I mentioned that before, the whole sleeping thing. Yeah, I'm one of those people. Everyone knows me. I'm very straight up. Tax, I fall asleep. Yeah. So, but no, go on. I'm going to stay awake.
Let's say you have a property where you've lived in it for 4 or 5 years.
Yes.
And now you've decided, hey, I'm going to move into a different place, and I'm going to rent this property out. Mm-hmm. Is that a taxable event? Is something going to happen there, or is that not a big deal? So I'm here to tell you that is a taxable event. So a lot of times people will move out of their residence and move into a new residence and rent out the old place, and they think that, hey, I don't have to do anything or say anything. However, tax law says that is a taxable event. Now, what happens is when you sell your residence, when you move out of your residence, then you have changed the use. Whenever you change a use, you have to let CRA know about it. And so what you're actually supposed to do is file a form called an election, and by filing that election, you let them know, hey, I moved out of this property and now it's my residence, so that later on, let's say 10 years down the road, I sell my property, I don't have to pay capital gains tax on part of it, those 4 years or 5 years that I lived in it, but I do have to pay capital gains tax for the years that it was rented out.
Okay, so that's great knowledge because that's very, very, very common. But let's go to the harshness of that for a second here. Mm-hmm. How if I don't declare? How about if I just pretended that, I don't know, my wife is living there and never changed her address?
Oh, wow.
Right?
Yeah.
You know, not me. Don't make it sound like, oh, wow to me. It's no, I'm law-abiding. But let's just assume someone else has that scenario.
Yes.
Right?
Absolutely.
Because I've seen it.
Yes.
Right? That absolutely. They move their wife or their dad or their mom that's untitled, they move their address there.
Right. Yeah, and there's a lot of different scenarios that we can get into where people try to go into a gray area and take advantage of the system, right? And so there is a thing called tax avoidance, and then there's a line, and on the other side of that line is something called tax evasion. So tax avoidance is civil, where you have fell into a gray area and you structured your affairs to pay less amount of tax. But then tax evasion is when you've done these sort of things where you're taking the truth and you're using a falsehood and you're something that's not true, and now you're into tax evasion, which there's criminal penalties for that.
It's fraudulent.
It's fraudulent and it's treated as a crime. So under the Tax Act, you've got gross negligence, fraud, and tax evasion. So tax evasion includes the fraud. So basically, for tax evasion, there's monetary penalties and fines and jail time. as well. So the penalties are not worth the risk. You have to look when you're taking a risk, what's my reward potential here? The penalties for these type of scenarios are not worth it if you're thinking about doing something.
And see, the second you mention penalties, and that's why I'm kind of really bringing up those topics, because everything else is like, oh, yeah, okay, I get it. But the second you mention, did you hear me? Did you really hear me? Because if you didn't hear me, this is what's going to happen. That's sometimes when the eyes light up like, what? Okay, so jail what?
Yeah, right?
You know what I mean? I can pay what? Criminal charges what?
Yeah.
Right? And that's what I mean. Some people do know the seriousness of it, but do they actually appreciate the seriousness of it is what I'm really getting at here.
Exactly.
Right? It's very, very serious.
And most people don't appreciate the seriousness of it because they haven't been educated on this. No one talks about tax evasion. When you go to your accountant's office during tax season, they're busy because they've got that April 30th deadline. They don't have time. And so they just want your documents to prepare it. So these sort of things, it's important to be educated before you file your tax return to learn what is the system I'm participating in here, right?
Now, we are planning to have Surinder as a permanent recurring guest, but there's so much to talk about that there's no which way that we can fill this 15 to 20 minute slot, but that's all that Ricky allows us to do with all this information. So we're going to have multiple segments, and hopefully that's okay with you.
Absolutely.
And even if it wasn't, we're still going to drag him in here.
He's going to,
right?
Yeah.
And we're going to make him wear a tie next time because... Exactly. With that being said, anything else you want to mention?
Those were the main topics I'd like to cover, so I'm pretty happy with this.
Well, like before, as we said, please like, subscribe, put that thumbs up. We're going to have Surinder's information right up here and in the bio area. It'll have the contact information, it'll have his times of operation, it'll have his turn-ons and I'm joking. But you'll have his information, if you want to ask questions. Great source of information. Just this short segment here, believe it or not, I actually did learn a few things, and that's just a short segment. Imagine if you do a sit down. Imagine if you have time to sit and understand and actually go through the knowledge of what this person can bring. So world of knowledge from BC Real Estate Podcast, on behalf of myself and Ricky, I want to thank you for finally coming on the show. I know you're busy, even though your office is just not too far away from my office, but that's what busy is. Office is not too far away and you still can't bring him on, but we got him here, right? So Rick, am I good with that to cut it off there?
Thank
BC
you.
Real Estate Podcast, Jeff Chadha.
Thank you for having me, Surinder Makkar. I'm very happy to be here. Excellent.
We'll talk to you guys soon. Bye.